Hello dear traders, welcome. It's time for my weekly MK block summary. Today is Saturday, markets are closed. Maybe I will need to make two parts, let's see. So let's get started. 3rd of April, Euro Aussie, upper order gaps. So the price came down. Above the price we have those beautiful order gap zones, so a good likelihood that there's going to be a pullback up to fill those. So a long inner range trade. So I wrote Euro Aussie is thinking whether it should fill the upper order gaps. Then on the 4th it filled those gaps nicely and then also went for the medium term stop right above, filling the grail. Okay, beautiful trade right there. Then on the 5th, we see shorties came in, some kinds of squeeze emerged, and they took all the stops above the high. Beautiful trade, that one. Nice one. Okay, and then on the 7th, look at that power of the squeeze. If you have a squeeze on the day chart, shorties coming into the market like here, it will go up and up and up like it did. Okay, these are the actual trends in the market. Nice one. Okay, Australian dollar. 4th of April, filling the 1 hour order gap zone. Here we see it's going to come down and fill it. And then 5:22, it's the same day, a few hours later, it filled it. And you can see nicely, like, you know, a typical 4 reversal. The highs have been cleared. Okay, a little down money switch, 4 hour energy down. Okay, whenever we see the 4 hour reversal energy plus the inner range stop ons on the 1 hour chart, this is a good combination as I've shown before. Okay, then on the 6th I wrote rather bearish. You see the price came down, but look, above the price we have a nice longy nest. Okay, so the price doesn't want to go up and let those win. So I said Australian dollar can go down further, has some 4 hour reversal down energy in the green nest above the price. So I predicted it will go down, and so it did. Okay, so that was 11:39 at 15:20. Around 4 hours later, came down nicely to the lower band. Alright, and then on the 7th it touched the lower 4 hour band. Beautiful trade, that one. Okay, euro pound a little bit more complex. So on the 4th of April I said euro pound in the process of filling the lower order gap zone and short term stop with some longies in the market. Okay, so on the 5th it took it nicely. You see, took exactly the target and then slightly undershoot, but then did a big pullback up. So euro pound took the lower order gap as expected. Now it reaches for the inner range medium term stop on the 1 hour chart, and on the 6th it didn't reach the stop, but it still filled the gap, and it filled the option strike signal. You see here, euro pound took the MTS order gap zone and option strike targets. Okay, so I mean, look at that. So took the lower one, took the upper one, again filled the lower one. Okay, then on the 7th I said bullish, euro pound should take that upper medium term stop here. Yeah, that one, and shorties came in and it came up after that. So more complex, but some nice opportunities there. Okay, so let's now talk about the more complex stuff, like here euro dollar, or maybe in the first video I should talk about the easier examples. Let me see. Anyways, let me just crack on. So 3rd of April we see that there's an order gap zone and MTS above the price in euro dollar, like, you know, the 30-minute chart. Okay, euro dollar similar to cable, normalizing move on a slow Monday in order to reach the M30 medium term stop order gap zone. If then DM longies enter, then trend resumption down, but obviously like something like this, but the opposite happened. Shorties came in. Okay, euro dollar could potentially turn down to short rate if no dumb money shorties get into the way, and as we can see, shorties came in. So they took the upper target by the pip. Like I wrote here, when the markets are empty like that and the net dumb money indices show that there's no decisive bias regarding the positions overall, the smart money often uses to make an exaggerated pullback, okay, and to take stops to clear out. And that's exactly what happened. So shorties came in, and then we also had some US news. They used that to take the next upper order gap zone at the high. Yeah. Boom. Okay. After the US news, they were slightly bad for the dollar. Then look at that, to the pip, pull back down, filled this lower zone, okay? And now things a little bit more complex. On the 4th, like I wrote here, look, it took the highs against the shorties, but with an ongoing squeeze. Eurodollar is highly sensitive to the next 10-hour dumb money flow now. The market is sensitive to any new dumb money shorties. Only if some shorties leave will Eurodollar normalize. Otherwise, the squeeze power will dominate. Okay? Because it's a squeeze. So be careful. Do not just blindly trade into those situations when you know that the market is very sensitive to sellers. However, as we know, so what happened is, shorties came in, so they took the highs, alright? So they took all the upper stops, like I wrote before. A squeeze on the higher time frame always dominates the market structure. Then the smart money algos prioritize going for the dumb money positions who have been caught, okay? So went up, took out the stops, completed that scenario as expected. But then on the 5th, so they took the next short-term stops here, but then we finally have some kind of dumb money switch going on. So first, this is very important. This is fantastic to actually show that here, because that will teach you a lot of things. So look, first of all, the price got stuck between longies and shorties, you see? Right above the price, we have dumb money long positions, and below the price, we have dumb money short positions. So what happens? The price goes flat, okay? Remember, time and range principle. There's no reason for the smart money to make a move and let either of those buyers or sellers win. So it's also, we see that an order gap developed below the price, okay? And I wrote, Eurodollar is going sideways because, E missing. It is stuck between some longies above and some shorties below. Very important. But then at 11:43, Eurodollar took some SDS, now loses momentum because there's a green nest above and a red nest below, also on the 1 hour time frame with an order gap zone. Now we have the next news being published, it was the PMI and was lower. So they used that to just take out some short-term stops, okay? But then we have some kind of market switch going on, all right? Now with the news out of the way, it shouldn't make so many typos. Eurodollar gets a chance to fill the order gap zone. So the news have been published. They did this little pin. After that, the situation clears. They fill the order gap zone, okay? And take note of this. You can see that suddenly the squeeze line slopes downward. That's very important, okay? Shows you that shorties left the market or got kicked out, okay? So this situation was still complex because we have some kind of forward reversal going on. We have a bit of a dumb money switch, but not decisive enough. But this is a problem. There's some kind of squeeze still going on. There's no complete collapse yet of the squeeze line. So, you know, like ideally would like to see a collapse, knowing that shorties have been kicked out, and then we can trade down. But this happened later, so this was still complex, okay? Eurodollar is trying some kind of for a reversal move and to fill order gap zones. However, there are many dumb money short positions the way, and the squeeze has not died yet. That means that the market is very sensitive to the shorties. Only advanced traders. Beginners skip Eurodollar for now, okay? And then on the 6th, we see finally the squeeze has died, you see? So the shorties got kicked out and left the market, and then the price came down further as a result, okay? And they did like this reversed grail pattern. And here you see better now. Okay, we have the money switch from shorties to longies. Shorties left the market. The high has been cleared. So that looks more bearish. However, the high has been not taken on the day chart. So that's why it's still complex, you see. If the high would have been cleared and this happened, you could trade down with more confidence. But without that, you know, it's going to go down, but it's sensitive to any new flow. Okay, so here I made these arrows. You see we have stops, short-term stops, medium-term stops below the price, order gap zones. Longies kept on buying and shorties kept on leaving the market, even though it was pretty slow. Then it came down. Welcome to part 2 of the MK block summary. So let's finish the analysis of euro dollar. So there was some kind of switch, it came down, however now there was a pullback up to the inner range order gap and medium term stop on the 30-minute chart, also order gap on the 1 hour chart, okay, because there was some shorties coming in. So pullback up, but then on the 7th, okay, like I wrote, order gap zone filled bearish, okay. Look to the pip, look at that, to the pip it took the order gap zone on the 30-minute chart and 1 hour chart, and then since the shorties got kicked out, boom, moved down against the longies, okay, towards the original target. And I wrote at 14.34, euro dollar filled the order gap zones, should go down once more. And look at that. So just a few minutes later, boom, down move. Okay, I shorted that one. Targeted the short-term stops, the lows, the order gaps on the 30-minute and 1 hour time frame. And later in the evening, the market settled down like that. So in the end, the squeeze died. We had a down money switch, and even though the price remained overall rather than the range, it went down and took the short-term targets. But as you can see on the y-axis, the price is a little stuck still between old longies and shorties, okay? So this is a complex market structure. There are good trades, and as you can see, I'm able to predict moves even then. But if you are a beginner, do not try to trade anything there, okay? This is for people who have experience in market structure, market causality, and they understand, okay, I may trade the short, but if something switches, I need to leave immediately, okay? Let's stay with the more complex stuff, though. The cable, let's go back to the third, doing pullback towards the M30 inner range, medium-term stop. So similar to euro dollar, they are correlated. That's the reason why, okay? So looked similar like euro dollar. You see there was an inner range target above the price. It did a pullback up there. And then with some squeeze emerging. So like euro dollar, did exaggerated pullback because shorties came in, sellers. You see, it's a bit like a mini down money switch on a 30-minute chart. Longies to shorties, and it did an up move to take the highs, okay? However, what happens then? So it goes up, it does this move, it takes the stops, and then on the 4th, I say rather bullish, similar to euro dollar. You see with the shorties below the price, the long-term stops above the price, and compared to euro dollar, look, the chart pattern on the higher time frame looked more bullish because look with 1-2 targets, so the likelihood was higher. They want to go up and clear the stops just above those highs, yeah, against the shorties in this kind of emerging squeeze. And that's what happened, okay? So easy trade, not difficult to predict. So it came up, okay? It took these targets. But then the same like euro dollar, okay? Things normalize again. We have a squeeze, but suddenly order gap zone below the price, loss of momentum. And then on the 6th, shorties left, but still sensitive to new red flow. Similar to euro dollar, you see, but cable already has a collapse in the squeeze line, you see. So that's valid for our reversal energy scenario. The money switch from shorties to longies. Shorties have been kicked out, some longies come in, highs have been cleared, targets have been reached. And boom, we have an option strike signal on the 1 hour chart time frame. So I said, okay, I'll take this short to fill the order, the option strike signal. If you have a situation like this, okay, like for our reversal energy, and then a signal like this combination similar to an inner range medium-term stop run is powerful. So that was a short down towards the option strike and the order gap zone and the short-term stops, okay? All three. Boom, look at this beautiful move. And here at 6.25, did a little pullback. But overall, like on the 7th, came down nicely. Filled the target exactly, you see? That was a nice short trade. And filled the order zone also. So pound dollar was a better trade than euro dollar because of the option strike signal and the earlier collapse, okay? So many things which one can learn from looking at those examples. Okay, let's go to the easier stuff. So 3rd of April, Kiwi, okay, Kiwi dollar, nice move as expected, came down from the week before. Then we had this upper medium-term stop target. It took it with a pullback below the price and order gap zone emerging. And I said, if no more many sellers come in, it can fill the zone. Okay. On the 4th, we also have a medium-term stop in a range below the price. Okay, and some kind of 4-hour reversal energy. Okay. At 10:47, I said Kiwi has some 4-hour reversal at down energy, but needs a red squeeze line to decrease its slope. Some shorties to leave. Okay, this is if you trade against the slope of the squeeze line, that's always dangerous. There can always be an up move. Okay, I've explained that in the recent video, because that's why we had like this counter move first. Okay, because of the squeeze line, and then, however, on the 6th, look, it took the upper target, normalized. Longies come in, shorties get kicked out. As you can see, they leave the market. And then we have the beautiful medium-term stop in a range and short-term stops below the price. Kiwi about to take the lower medium M30 time frame, medium-term stop and order gap zone and short-term stop. A new medium-term stop developing above also. Okay. You see it nicely on the forward chart. Okay, highs have been cleared. Nice pin, nice retest, and then down money switch and collapse. So it came down nicely. Nice short trade I did there, exactly to the medium-term stop target. Look at this precision. Okay, this is not so difficult, really. It's like if you understand everything I've posted in the video course and you do some, you invest some time into watching the MK Web live, you will see those kinds of things over and over again. So here at 629, I did this. Okay, so target's been reached, a pullback, and then some trend resumption down, something like this. And indeed, oh, that was pretty good. Look at that. Followed my line. Okay. So on the 7th, still bearish. Look, at 9:34 in the morning, I said still bearish. This is a target. Long is coming in. Long squeeze. Boom. Okay. If you trade against that squeeze, that's always a great trade. Okay. New longies, old longies, and a squeeze, short trade with some 4-hour reversal energy down towards the low. Not difficult. Not difficult. Beautiful trade. Okay, some honorable mentions. Dollar cuts from the week before. We saw this massive squeeze. Look at that on the forward chart. Expanding longies, buying, trying to buy the dip, and this results into a downtrend, failed reversal, down, taking out all these buyers. Okay. Boom. Understand what that means. That's how the market works, guys. That's why we have those moves. Only because of that. Now, I did this screenshot because I found interesting to document what happens after. I mean, the market is so overstretched, and then, the squeeze says peaked, and then it does a bit of a pullback because a bit of shorties came in. But yeah, if longies come in again, it can even go down again. We know the game, yeah? But of course, the best parts of the steak have been eaten, as I wrote here, yeah? This is the good pips here. And I did a nice short trade there. That was one of the best trades last week. Okay, pound yen, look at that. We had those 2 option strike signals on the 1-hour chart. I wanted to show that. And look, it filled them. Look, first the one pullback and then the second plus the order gap. These are very good signals, especially combined with other things such as MTS, STS, and order gap zones. But pound yen was more complex because there were many shorties in the way. But I mean, these trades are not difficult if you have all these factors in a dying squeeze line. Okay. Gold, yeah, I just showed there was a squeeze on the high time frame. Look, shorties coming in, boom, up move, gray pattern, same like silver. Beautiful trade. I did this one. Interesting here on the 31st of March. Look, I said I'd take profit because of the option strike signal. And yeah, this exactly, look, it did a pullback down to the option side signal, but I missed to buy it again here. I should have bought it here. I missed that last part, which was a squeeze extension and took all the high. This is very repetitive, ladies and gentlemen. Okay, the market causality is the closest you will ever get to a holy grail in Forex. I'm proud of that. I'm proud that I can show these things like that. Here again, we see dollar yen. We talked about that. Yeah. Because at the end of the day, this is so powerful. Okay. Look at that pullback up to the upper order gaps.